It gives me great pleasure to start this forum that we have focusing on Ecuador's economic and trade agenda. Before we begin, I want to just start with some logistics. We have simultaneous interpretation. You'll see a globe at the bottom of your screen. If you would like to hear Spanish or English, you can click on that depending upon the language being presented. This session will be in English. Also, we encourage you to ask questions. There's a Q&A button, so you can type in your questions and we will try to get to as many as possible during this session. At this time, I'm pleased to introduce Luis Alberto Fierro, who's Ecuador's Vice Minister of Economy at the Ministry of Economy and Finance, who will discuss Ecuador's economic and trade agenda. In his role as Vice Minister, Luis is responsible for providing strategic direction for the formulation and execution of economic policy for the Republic of Ecuador. This includes planning and monitoring, as well as evaluating economic policies and the analysis of microeconomic consistency. A key focus of Luis's work is promoting sustainable economic recovery for Ecuador, while addressing the reduction of poverty, the promotion of equity, and addressing climate change. With a PhD in economics from the University of Texas at Austin, Luis has a background in the areas of regional economic development, international economics, public finance, environmental economics, with a focus on climate finance. Before joining the ministry, Luis served as a climate finance advisor for the French Development Agency and headed up his own consulting firm advising clients in the area of climate finance. At this time, it gives me great pleasure to introduce Vice Minister Luis Alberto Fierro. Luis, take it away.
It's a pleasure to participate in this event, and thank you to the Institute of the Americas for the invitation. As Richard says, I'm a big promoter of climate finance in previous positions, and so that's one of the things I will talk about. I will share a presentation focusing on the opportunities that the new government of Ecuador is presenting. First, I will talk briefly about the pre-COVID economy, which is a heavy inheritance. We had, sorry, one second. We have an economy that's heavily dependent on oil prices, and Ecuador has struggled to grow ever since oil prices fell in 2014. Here you see the average growth rate in the period 2002-2014 was 4.6%, and in the 4 years before the pandemic, it was 0.5%. And that was in part due to the fall in oil prices. The country wasted the opportunity to create a sustainable economy during the years of the oil price boom, roughly from 2007 through 2014. And in fact, there were several small stabilization funds that had been created in previous governments, but unfortunately in 2008, they were eliminated. And so when oil prices started to fall in 2014, more heavily in 2015, our revenues also fell, and consequently, the governments then in place, the government of Correa and afterwards the government of Lenin Moreno, started to, in a path of very rapid external indebtedness. We had quite high fiscal deficits despite the high oil prices. Over the past several years, these deficits were funded with bilateral debt, in part, for example, from China, external bond issuance, and the monetization of fiscal spending. So we have here the increase in public debt as percentage of GDP, which had fallen to below 20% in 2011, and now it's reaching 63% of GDP. So we can see this very rapid increase in public debt, which occurred under the previous administrations. And we also, not we, the previous governments used the central bank to finance the fiscal deficit as well, which created serious imbalances in the monetary sector, feeding an unsustainable credit cycle, which pressured the balance of payments and international reserves. And a large part of the central bank's assets were internal assets, mostly bonds issued by the government. And also, we transferred to the central bank the shares of 3 public banks instead of paying previously issued bonds. And so the reserves of the central bank were, in fact, fairly illiquid. It had a lot of long-term Ecuadorian government bonds, as well as the shares of these public banks. Where our export base became increasingly dependent on primary products, and Asia became an important trade partner. Here we see the participation of the main export products: oil, banana, shrimp, other primary and industrialized. And on the right-hand side, we see the main destination of non-oil exports, which, as you can see, the proportion of Asia, which is the yellow bar, increased, especially for products like shrimp and other primary products. So now, well, we had the pandemic, which of course hit Ecuador's economy pretty hard, as it did in most other countries of the world. But we had a reduction of GDP of 7.8%, which was fairly substantive. It was, I think, the largest fall in GDP since in the 21st century, at least. We also had the collapse of oil prices. For a few days, it was actually negative price. But also we had a problem with production because of some difficulties with the oil pipes. So we had basically a perfect storm. We had the measures taken to confront the pandemic, which caused a stop in several economic sectors, including, for example, tourism, which is another source of revenue. And we had a large increase in the risk premium in the MB spread of Ecuadorian bonds. And finally, the previous government had to restructure the public bonds. It was a fairly friendly process, let's put it that way, with the agreement, the consent of the majority of the bondholders. And we were able to reduce the outstanding bond. There was a haircut in the price of the bonds. And also, the main thing was that it increased the period of repayment and created, in fact, a grace period for the first few years in which mostly the interests were paid, and even the interests were substantially reduced. So we had, the previous government had to also request an extended facility from the IMF. And this enabled a recovery of the international reserves. You see there the graph, we reached basically a lower level of 2 billion in January 2020. But gradually, with the disbursements from the IMF and from our other multilateral partners, this reserve was rebuilt. And in fact, it reached about 7 billion. Here we have the evolution of GDP. As you can see, even before the pandemic, it was pretty flat. And then, of course, we had the collapse in 2020. And this year, we are expecting a recovery of about 3%. We had actually a trade surplus in the last months of 2020 and first months of 2021 because imports also fell dramatically. But the cruelest outcome of the pandemic was an increase in the already existing levels of inequality in the economic and social conditions of Ecuador. We have here the distribution of the population per income, and here we can see that only the top 4% of the population have an income of greater than $1,000 per month. And we have a large proportion of the population earning even below what's our minimum wage, which is $400 currently. And we, in the right-hand side, you can see the average income loss between 2019. And the impact of the pandemic was especially severe in the lowest deciles of the income distribution. The poverty rate increased to 32%, and also the Gini coefficient increased. These were indicators that had been improving the past 2 decades with dollarization. But now, of course, with the pandemic, it has increased again. So we designed a strategy to strengthen fiscal revenues, which is focused exclusively on the economic segments that were the least affected by the pandemic. So basically, only we're going to propose a tax reform that would impact only the top 4% of the population, of the income distribution. So these sectors that were least affected by the pandemic, in fact, as in other countries, some of these sectors increased their savings. So that's why our tax reform proposal will focus on the top 4% of the population. And the successful implementation of this reform is of the vaccination plan will also be a contributing factor to the reactivation of the economy in the coming quarters. This graph, in fact, is kind of out of date. Currently, the totally vaccinated population of Ecuador is over 52%. And in fact, I think we have surpassed the US. We were commenting that with the US ambassador who was in the meeting here in the ministry this morning before going to speak with him. And so we had this very successful vaccination plan. It was proposed by President Lasso, who took office on May 24th, that he would vaccinate 9 million people in the first 100 days of his administration, which when he proposed it seemed like impossible to achieve. But in fact, it was achieved. So we were very glad to see that. And we're not stopping there. We're going to continue increasing the vaccination coverage until we reach at least 70% of the population. And then when we will also include the younger population, should reach 85% eventually, which would be a real achievement. Some other high frequency indicators are hinting that a recovery is underway. Here, the first graph shows the sales, internal sales, year-on-year growth. And we had a very peak there of more than 60%. But then still very positive growth with respect to the previous year. Of course, the previous year was in the midst of the pandemic. But we are already starting to see some indicators in which both the sales and the tax collections are increasing over the 2019 levels. The second graph there, you can see the value-added tax collections versus the average of 2012, 2019. And so we are already surpassing that average. The inflation, I guess many economists don't like to see inflation increasing, but in fact, this is increasing from a negative number. We had a deflation over most of the pandemic period, but now we are back to about 1% annual headline inflation. Also, another indicator is that we are increasing our registered formal employment, the work that is registered in our Social Security Institute. We have had a positive trend in the last 5 months. About 206,000 additional employees have been registered in the Social Security Institute through July. We have an increase in non-oil exports, although that was one sector that really withstood the pandemic fairly well, but still we are increasing over the levels of 2019, let's say. And the referential corporate interest rate, which is still high, but it has come down from its heights of about almost 9.5%, and now it's around 7.5%. And we really are striving to decrease the risk premium on Ecuador, and with that also decrease the interest rates. There's still a lot of work to be done to convince worldwide investors to deploy their investments in Ecuador. The day after President Lasso was elected, there was a fall of about 400 points in the MB spread, 400 basis points, that's about 4%. And since then, it's been fairly stable, although it has improved a bit in the past few weeks, in part due to the the increase in the oil prices. But also yesterday, we announced the staff level agreements with the IMF on the second and third review of the extended facility. And we also concluded the Article 4 review process. And so we hope to have the board approval of the IMF at the end of this month. The graph on the right there shows some other sovereign risk ratings. And we currently have B minus, but we have as a goal, in fact, the president has a very stringent goal of trying to reach investment grade. We hope that we'll be able, but in any case, we hope to improve in our risk rating and to further decrease the MB spread. So now to talk about the structural challenges that we will face, and the president and the administration has very strong agenda of reform. Our baseline scenario is that Ecuador will reach potential growth rates in the coming years alongside the rest of the region, but we must capitalize on reforms and opportunities to boost growth over the medium term. Here you have the historic and projected real GDP growth in the next 4 years, and also a comparison with other countries in Latin America. So for 2002, 2014, we were among the countries with the highest growth rate after Peru. But then in 2015 to 2019, as I mentioned before, we had a very slow growth, less than 1% per year, and much slower than the other countries in the region, except for, I think that's Brazil there. But for the period, for the upcoming 4-year period, we hope to regain our potential growth rate, as I mentioned, and be, near at least the average for Latin America and the Caribbean. Although with the reforms that we are envisioning, we actually hope to reach an even higher growth rate. The president has called for a 4% average growth rate in the next 4 years. Again, it's an ambitious goal, such as the vaccination plan was, but we hope to be able to at least boost the growth rate. I'm sorry, I had forgot to forward the slides there, but Now we're caught up. On the monetary front, strengthening the central bank's balance sheet will reestablish the necessary macroeconomic equilibria to guarantee the stability of dollarization. We have been increasing the international reserve coverage of monetary liabilities at central bank, but we have a very stringent goal of increasing the liquid assets in the central bank. According to a law that was passed last year, we are no longer able to roll over the bonds held by the central bank. So this year, for example, we're going to repay about $700 million in bonds, and this will continue through 2026 until we eliminate basically the public debt held by the central bank. Another decision that was adopted was to resell to the state, to the ministry, in essence, the shares of the public banks that had been given to the central bank in lieu of payment of public debt. We have agreed on a schedule to make those repayments of the bank shares. So by 2036, an agreement with what the law calls for, there will no longer be public debt held by the central bank, and we will completely repay the shares of public banks that were previously held by the central bank. On the labor front, the labor market reform is indispensable to recover formal employment and increase productivity. Adequate employment, which is basically formal sector employment, has been falling precipitously in the previous years, even before the pandemic, but the pandemic, of course, was severe, affected this severely. Both the decline in oil prices and then the pandemic have reduced the adequate employment from about 50% of the economically active population to currently it's about 31%. So we need to boost this adequate employment. And on the right-hand side, you see the adequate employment of men, women, and young people. And you can see that especially this has affected women and youth, which are below even 30% of adequate employment. On the trade front, we hope to promote competitiveness and opening Ecuador to new markets. These are necessary measures to boost non-traditional exports and strengthen the balance of payments. Here we have the real multilateral and bilateral exchange rate. We have had a slight depreciation of the dollar. As you know, Ecuador is using the dollar as its national currency in the past few months, but we have had a appreciation of with respect to Colombia because Colombia has devalued the peso. And here we see the non-oil exports in billion, and we have had an increase, especially of primary non-oil exports. One sector that is coming online now is the mining sector. It had a triple-digit increase in mining exports from last year to, well, from January to July of last year to January to July of this year. And we can have expectations that it will continue to increase production and exports. Here we have the projected mining exports on the right-hand side. These are just the two projects that are already online, but we expect to have additional investment and expansion of the extraction of minerals, and so this will increase even further. On the left-hand side, you have oil production. As I mentioned, there was a fall in last year because of problems with the oil pipelines. But now we have had a slight decline in the past few months, but we have an expectation of an increasing production. The president has said that he wants to double oil production. Again, an ambitious goal, but at least we hope to increase production significantly in the coming years. In fact, for this year, there's already a goal of increasing it by 8%. And we are opening up the oil sector to private sector investment. And mining, for the most part, is a private sector, but we hope to develop these sectors in an environmentally and socially friendly way. With lower red tape, lower interest rates, and lower country risk, coupled with the expansion of public-private partnership initiatives, we hope that the private sector will become the main engine of growth in the economy. We have an expectation of increase in private sector investment, private fixed capital formation as a percentage of GDP. And as I said before, GDP will also be growing. So in absolute terms, we have an expectation of significant increases in private investment. On the right-hand side, you have the average foreign direct investment in the 2010 to 2019 period. And as you can see, Ecuador was very low. It was less than 1% of GDP. But we hope to catch up to other countries in the region and significantly boost foreign direct investment in Ecuador. We are going to promote opportunities for all. One of the things we will do is modernize the labor market to speed up the hiring processes and improve social protection of women and youth. A key area of focus for the government is to reduce chronic malnutrition in children. We consider unacceptable that with our level of income per capita and our human development index, nonetheless, the chronic child malnutrition is the second highest in Latin America. We consider that unacceptable. And this is one of the social indicators that did not improve at all under the previous governments. We also want to narrow the social gap, reduce inequality through the promotion of a progressive fiscal reform in which those who have more will pay more in order to support social protection policies for the most vulnerable population. One of the conditionalities of the IMF agreement was to increase the number of families that have access to social protection bonds or transfers. We call them bonds here, somewhat confusingly. But in any case, cash transfers. So we have already increased by more than 400,000 families, and the coverage now is about 1.5 million families. So a significant proportion of our population. But we are also restructuring these programs to make sure that the resources go to those that need them the most. So focusing on the lower 3 deciles of income distribution. In fact, the lowest decile is one of the income groups that is most difficult to reach. In many cases, they're in informal sector or are unemployed and they don't have good social networks. So the government's really making an effort to improve what we call the social register, the identification of these populations that need the support the most. We also have want to promote healthy public finances. We want to have more efficient tax collection. We have enhanced the large taxpayer unit of our IRS, our Internal Revenue Service, to improve the exchange of tax information with international counterparties and within public institutions. We already have an exchange of information with the US, and we want to include 140 additional jurisdictions through the global forum. We also want to have a fair tax system, enhance the contribution of those who have more and were less affected by the pandemic. We want to have promote the disclosure of undeclared foreign assets by Ecuadorians. We want to get rid of privileged treatments, have a more fair fiscal treatment. And we want to guarantee that Ecuador does not fall again into an unsustainable indebtedness spiral, nor waste resources during the boom years. So we have a law, organic code of public finance that will require that the public debt to GDP ratio fall to 57% of GDP by 2025. But our current plan is in fact to exceed that goal of reducing it from 64% about currently to 55% in 2025. We also want to reduce the size of government, hold back fiscal spending, and avoid wasting resources. We want to have more transparent procurement processes via economies of scale, program purchases, avoiding disorder and corruption, and also to disclose the final beneficiaries, the owners of the companies that receive public contracts. We want to fight corruption. Corruption was a very big problem in the last 14 years. We will have a controller's office prior audit for public purchases, implementation of a national control subsystem, and strengthening the reporting of final beneficiaries of companies that receive public contracts. We also want to reform public companies, improve efficiency and transparency, publish audited financial statements, and increase financial autonomy. One thing I also want to mention is that the COPLAFIP, the Organic Code of Public Finance that I mentioned before, requires the establishment of a fiscal stabilization fund for oil income once public debt falls below 40% of GDP. So it won't happen immediately, but that is the goal. And also the Decree 95, which liberalized private sector investment in the oil industry, also established a smaller fiscal stabilization fund that would basically be oriented towards the chronic childhood malnutrition program. We want to promote more Ecuador in the world and more world in Ecuador, as the president has said. We have already lowered import tariffs to lower production costs for local industry and exporters. We are promoting free trade agreements. We are trying to close the trade agreement with Mexico this year, which would also enable our complete participation in the Pacific Alliance, together with Mexico, Colombia, Peru, Chile. And we also want to promote the US free trade agreement. Colombia and Peru already have it, so we want to basically adhere to that, as we did in the case of the European Union, where we also included Ecuador in the free trade agreement that had previously been established with Peru and Colombia. We want to phase out what is called the capital outflows tax, because we see this as a disincentive to attracting investments. We will do this as public finances allow. Currently, it's a 5%. And also, I should say there are exemptions for this tax, the ISD, we call it, the capital outflows tax, and also for a value-added tax for investments of more than 1 year, for example, in the through the stock market or through investment funds. We have already returned to the ICSID, the World Bank arbitration system, which will provide additional security for foreign investors to invest in Ecuador with uniform rules for everybody. We want to support investment, support the private sector investment, businesses, entrepreneurship. We want to lower red tape and production costs, make entrepreneurship easier, and reactivate the economy. We want to promote public-private partnerships in energy and public infrastructure sectors, balancing fiscal and environmental risks and giving priority to projects of high social impact. We want to increase with private sector participation in the oil production to maximize the benefit for the government with the support of private capital. We want to promote, as I said before, responsible mining, promote the development of an environmentally friendly mining sector that is also responsible with the local communities. We want to promote a more inclusive and modern financial markets. We have eliminated privileged treatments in the public banks. We're trying to collect from large debtors, guarantee a responsible and transparent management, and publish audited financial statements from these public banks. We have essentially 5 public banks. And also there's a commercial bank that is owned by the state, Banco del Pacífico, and the government wants to sell that. And the president has said he would prefer to sell it to an international financial institution so as to further integrate our financial market with the international financial markets. We want to promote our domestic capital market, development of an ordered and systematized domestic debt market, enhancing a predictable funding strategy for the government with liquid public debt instruments and with transparent transactions through the stock exchange. We want to promote financial inclusion, strengthen the public financing for small and medium enterprises with a gender and environmental focus, and easing the integration to formal credit markets of currently excluded debtors. One area we want to really push is climate finance. Both through the public banks, we are also considering the issuance of a green bond, a sovereign green bond, as well as a blue bond. And also through the public banks, as I said, and also through the private sector. One private bank, Banco Pichincha, already issued a green bond in 2019. We want to further strengthen the dollarization system, strengthening of the central bank. As I mentioned before, repayment of the internal debt held by the central bank, repurchase of public bank stocks, increasing autonomy and technical capabilities of the central bank. We want to further reduce interest rates and transfer costs through greater dynamism of the domestic financial market, promote credit, strengthen the central bank's liquidity and the backing of its liabilities. This is the presentation I had prepared, but I'm glad to answer any questions you might have.
Thank you, Luis. At this time, we've got about 10 minutes for questions. I'll lead off. I encourage those of you that have questions to put them into the Q&A chat box, and we'll get going. Luis, let's start with trade. You spoke about Ecuador's desire to expand its trade relationships, including with the United States. What do you see as some of the obstacles to passage of a FTA in Ecuador during Lasso's administration?
Well, I think the government is very keen on achieving this trade agreement. I would say I see more difficulties on the US side, actually, the US Congress. But I think there is, for example, the trade agreement with the European Union has been very successful and has increased exports of Ecuador to the European Union. And of course, also imports from the European Union. And I think this establishes a kind of a framework for convincing the population of the benefits of free trade agreements. The Correa government was very opposed, to put it mildly, even though finally they did kind of cave in and sign the agreement with the European Union. But I think there's growing consensus that it's important to promote these agreements to expand our markets for our export products, and also to lower the costs of imports. As I said, we have already reduced, or in some cases eliminated, import tariffs on, I think it's 670 import lines. Mostly this was for capital goods, for intermediate goods, and for inputs for our own productive processes. But also, for example, reduced and I think eliminated for computers, for cell phones, for electronics in general. And this was done in part also to boost, our education system and to boost our productivity. So I think, well, at least the government, the Ecuadorian government, is very keen and very hopeful to further promote trade agreements. As I mentioned, we want to finish the trade agreement with Mexico so as to fully join the Pacific Alliance. The president has also mentioned the US, and he has also mentioned with China, which would be also interesting, I think.
Thank you, Luis. We have a question and a comment from Carlos Morgner. First, the comment, and I think it's interesting in light of your comments about the need for greater tax collection. Carlos' comment is Ecuador should bring back business talent by creating incentives for homes, factory lands with a tax holiday for 5 years. I don't know how realistic that is, given Ecuador's need to close up its own fiscal gaps. The comment, and then his question had to do with Ecuador's energy plans, and given your climate finance background, it'd be interesting to get your perspective. He's asking about what the plan is for electric cars, buses, equipment, as well as hydrogen. Is Ecuador looking at a hydrogen economy strategy in the coming years?
Well, on the first question or comment, there are actually already incentives for investment in Ecuador. There's a committee headed by the Minister of Production that has already approved this year investments for, I think, 700 million. And these typically come associated with some tax incentives, both on the value-added tax, on the currency export tax, and even income tax in some cases. So I would encourage Carlos and other investors interested in Ecuador to explore these opportunities. As I mentioned, there is already a exoneration of the currency export tax and the value-added tax for investment, for example, in the stock market and in some domestic bonds and some other instruments here. Regarding the question, in fact, that is one of the areas that we are very keen on. There is already energy efficiency law that was passed that will ban the importation of internal combustion vehicles for public transportation after 2025. But also, Ecuador currently has a subsidy for diesel, which has always seemed like a crime to me. Instead of subsidizing fossil fuels, we should have a tax on them. But in any case, this diesel subsidy is being phased out gradually. But we have an excess production of electricity. And most of our electricity generation is very green, very renewable. We have, as I said, excess capacity, especially through hydroelectric projects. But we are also promoting investment in solar and wind energy through private companies. The government would buy the electricity generated. We're discussing now the establishment of a kind of a trust fund so as to handle the payments to these foreign investors in renewable energy. But all of this leads to the conclusion that, of course, we have to move towards electric mobility, both to do away completely with the diesel subsidy and to better utilize the high level of electric generation. So we are already have some loans from multilaterals to purchase electric vehicles. There is a large loan that will be done through the French Development Agency, the German Development Bank, KfW, CAF, and the Green Climate Fund that will promote in general the e-mobility sector. The loan is called eMotion, which I thought was a clever name. And this would fund not only the purchase of electric vehicles, but also the deployment of electric charging stations throughout the country. Of course, that is a requirement to be able to have electric vehicles. And this would be not only for electric buses, but also, for example, trucks and taxis. I know, for example, Chile is heavily promoting the hydrogen sector. And I think we could also use that because, as I said, we have an excess capacity in hydroelectric generation. So we could probably produce that at a competitive price. But for the current time, I think we will move mostly into electric vehicles. We also, I might mention, we already have a metro in Quito, which is of course electric. We also have a tramway system in Cuenca, and we have cable cars in Guayaquil. So we are already investing a lot into electric public transportation.
Thank you, Luis. Appreciate those comments. We have a question from our board chair, Jorge Rosenblatt. He asks, how do you see the space for Ecuador in the Pacific Alliance, and how will Ecuador take advantage of that going forward to maximize impact for the country?
Well, as I said, we are in the process of closing the trade agreement with Mexico, which would allow us to fully join the Pacific Alliance. We are very keen on joining and participating actively in the Pacific Alliance. At the same time, there have been some changes, as all of you probably are aware, say in Peru. So we will continue to expand our trade agreements with different groups, with different countries and so forth. We want to have a very open economy. We want to promote non-oil exports. We want to promote private sector investment in Ecuador. As I said in the previous question, we have already these they called investment contracts, but basically they're agreements to invest in Ecuador in exchange for some tax incentives. We are also opening, we hope to change the oil contracts from private companies to participation contracts. The Decree 95 was headed in that direction. So we really hope to have a very strong private sector investment in the oil sector. As I mentioned, we have rejoined ICSID, and we are keen to rebuild kind of the bilateral bilateral investment treaties that Correa's government did away with. There are, I think, 2 or 3 that are surviving with some European countries. We hope to be able to update them and have them in place. But we will also explore bilateral investment treaties with other countries as well. So yes, we are very open to foreign investment and hope to promote this.
Thank you, Luis. One final question, and then we will wrap up. You spoke about the Lasso administration's goal to bring Ecuador to investment grade. Right now, you mentioned that their sovereign debt rating is B-. What's going to be the strategy to get there?
Well, first, have a responsible and sustainable public finances, reduce the public debt to GDP ratio, as I mentioned. We are very active in talking to the credit risk agencies We had several meetings with Standard & Poor's and with Fitch in the past few weeks. I think the approval of the agreement with the IMF will also help. We also closed the policy matrix for budget support along with the World Bank. So we are expecting to receive about $4.5 billion on top of from multilateral institutions and bilateral institutions on top of the 800 million now and 700 million from the IMF in December. So altogether, we have financed, let's say, the financing gap that we had for this year. We expect to go back to the markets next year. And we are also, as I said, exploring the possibility of issuing green bonds, blue bonds, thematic bonds in general. There was a small issuance of a social bond in the Moreno administration that had a guarantee from the IDB. We might pursue also that possibility of issuing bonds that have a guarantee by multilateral institutions. But in general, I myself am somewhat surprised that the MB spread has not fallen even further. It's obvious that the current government is making efforts to reduce the fiscal deficit, to reduce the debt to GDP ratio, to regain a more fiscal balance in the long term. As I said, we expect to reduce the debt to GDP ratio substantially over the 4 years. So I expect that the credit ratings will improve and the risk premium will fall.
Thank you, Luis. Well, this closes this session. Luis, thank you so much for your presentation today. I think we learned a lot about the economic outlook in Ecuador and the agenda that the Lasso administration has for these years going forward. I want to encourage all of you to join our next session, which will build upon Vice Minister our presentation, focusing on COVID-19 impacts and the economic outlook for Ecuador. This will be chaired by Jorge Rosenblatt, our chairman. So I look forward to having you at our next session. Go to the link and that you all received for this presentation, for the forum, and you'll be able to access that session. Thank you all. And Luis, thank you again for your time today. We look forward to seeing you at the next session.
Thank you very much.